Hey everyone, what's going on? It's Jason here. Today I'm going to my top three picks right now. That in this little bit of a stock downturn, my top three picks for a long-term growth potential. If you could, make sure you guys click the like button below. If you're not a sub, hit that sub button, and let's get right into it. The first one we're going over right here is Tesla. I know a lot of you guys probably know Tesla. You guys know it's one of my favorite stocks. I've been in Tesla for quite a while myself, but I do think Tesla has a long-term potential to even more than double itself from the current price it is right now. If we pull Tesla back over this last 3 months, as you can see right here, at its current peak on January the 26th, Tesla was trading around almost $900 at $880. We have had this economic downturn, obviously, a little bit in the stock market. It's kind of came back a little bit. We had Tesla dip all the way down to $539 on the 5th of March. Since then, we did recover up on Tesla. We got all the way back up above $700. But again, we did have this little downturn again with the treasury yields, the 5 years and 10-year treasury yields brought Tesla back. Currently, Tesla is sitting at $654.87 as of Friday. In the aftermarket hours, we did have this come back a little bit to $652.02. Now, if we bring out the price targets here on TipRanks, TipRanks has the median right now on Tesla at $641.12, as a low as $67. I don't know who made that low, but whoever made that low, just needs to stop. Got to stop. It's Tesla, man. Tesla, at the end of the day, there's no way Tesla's going back down to $67. Going up from here. I hate to tell them, but that's just how it is. They got a high of $1,200 by this time next year, pretty much. By this time next year, they do have a outlook of $1,200 as their high. I would not be surprised to see that, as long as we do see this economic downturn turn back up, which I do think we will see that starting within the next few months. And I do think we'll see a big rise with Tesla, or I obviously wouldn't have Tesla in this video. Obviously, with this economic downturn we've seen a lot of people be loading up on Tesla at this price point. You had ARK, they literally just added a bunch of new shares with ARK right there. Obviously, that is Cathie Woods. I'll go over that in a little bit. She's being her new thesis, her bullish thesis, came out yesterday, and it's pretty crazy what she thinks Tesla could get to by 2025. ARQ added a lot more Tesla as well right here. You had Cloud Alpha at 111,000 shares as well right there. Fidelity right there as well at 264,000. Another Fidelity right there as well with 400,000. It's just a lot. Los Angeles Capital Management added a lot more shares as well on the 10th. The Amundi Pioneer Asset added a ton of more shares on the 9th. You can just go down the list right here and see all the new, institutional ownership. Like I always like to say, if you want to be a millionaire, you want to be a billionaire, you got to think like them. And these people right here are the ones that are doing it. So I like to go after these charts and see who is buying into these stocks. You have right there, Norges Bank just added almost 7 million shares on the 2nd, and right now you're getting even a better deal than they got when they bought in with the 7 million shares. Now I do want to go over this real quick with Cathie Woods, obviously, because I know a lot of people are going to be talking about that probably in the comment section. ARK Invest, obviously founder in Tesla bull Cathie Woods, has published a new Tesla target price, and it's a doozy. Again, it beats even my target. So I have my own targets out there as well, but it's high. She says it's going to hit 3,000 shares. She expects it $3,000 a share by 2025. In my outlook, I had it around $2,200 a share to $2,400 a share in my outlook. But I wouldn't be surprised to see it 3,000 either. I don't disagree with her. That means Wood expects to earn nearly 50% a year on average between now and 2025. Now, honestly, again, I do think that's around 30 to 40. We can see 30 to 40% a year, honestly, in my outlook. And I'd be happy if we're earning 25% a year. That's really good returns. But again, if we're earning 50% a year, that's even better. 2025, based on the Tesla's closing price, is $654.87 a share, obviously on Friday. That would make Tesla worth roughly $3.6 trillion based on shares outstanding, including management stocks, options, and other potential shares. Apple, in comparison, is worth roughly $2 trillion today. Apple would have to gain roughly 30% a year on average to keep this title as the most valuable US company. ARK Invest has released, obviously, their Tesla thesis, and you can see it right here. She has it at $3,000 as her expected price, or they have it. Obviously, it's not just Kathy Woods; it's her whole team, right? So they have it at $3,000. It says this projection is based on our case for Tesla's stock market price in 2025, based on our Monte Carlo analysis. They have a bear case, obviously a bear case, the worst case scenario at $1,500 in 2025. I really doubt it's going to be $1,500 in 2025. You got to remember, you have so much. And again, Kathy Woods didn't even add Tesla's solar business to this. So this isn't even including the solar business, which I actually included in mine. I gave it a little bit of a downgrade, to try to give myself a little bit of conservatism on the price points. So if she's saying $3,000 without the solar system, I'm going to say like $3,500 to $4,000 on that expected value target with the solar business, because that's going to be bigger and bigger and bigger as well, in adding lots of money to the Tesla's overall price. The bull case she has at 2025 is $4,000. And again, this right here does not add in the solar business. A target Woods set in 2018 was $800 a share. And you remember, she was very bullish on Tesla. And she was really right on Tesla in terms of like the price point that it got to. And a lot of people laughed at her then. I see a lot of people right now saying, how's that going to happen? LOL. I seen the exact same comments back when I was first investing into Tesla, back when Tesla was under $200 a share years and years and years ago. People laughed then, man, and they still laugh now. They hear these assessments on Tesla. And guess what? They just keep getting proved wrong, and Tesla just is knocking out the ballpark. They're miles ahead of every other company out there in their same industry, right? They've been around a lot longer. They have the autonomous systems that are a lot more sophisticated than others as well. That's one reason why I'm so bullish on Tesla. The next one on the list is NIO. I know a lot of you guys know NIO as well. Obviously, Tesla and NIO are my top two holdings in my portfolio as well. And the reason that being is because I actually believe in both companies. Obviously, NIO is a Chinese EV manufacturer. But China's market is so big in the EV, and you got NIO moving over into Europe, and eventually they do have offices here in the United States, and I do think eventually they'll be here in the United States as well. Do I think NIO's the next Tesla? No, I think NIO is going to be NIO. I don't want NIO to be the next Tesla, right? I think both of these can coexist. There's going to be plenty of automakers, just like there is now in the combustion engines as well. So I do think we can see a lots of EV car makers make it out of here, right? I also own XPeng as well on top of that. I do think all these guys could do great. Same thing with CCID, with Lucid, and other ones. If you were to bring, let's just bring NIO back. Let's just look at the 3-month chart, kind of like we do with the Tesla. Obviously, at this high point so far, NIO was at $67. It was up to around 64, 65 bucks before the stock market started pulling back in early to mid-February. It pulled all the way back to $31.91. As you guys know, I did say load up then, and I still say load up now. I think NIO at right now, its current price at $37.07. I think there's tons of room for NIO to grow from here. I think under $45 is still the price for NIO. Does that mean the market might not pull back a little more? It might pull back a little more. I don't know. Again, I am not a financial advisor, so obviously make sure you guys are doing your own research. I always say this over and over again. Make sure you guys are doing your own research. I do my own research. I spend hours and hours and hours breaking down these companies, looking at their earnings, seeing what their future projections are. And I'll also look at companies within their industries as well to see where I think is going to happen with them. I wouldn't invest my own money into a company I didn't believe in, right? I have a wife and kids. I got people to take care of, so I want my money to grow, and I'm not going to invest my money into something I don't think is going to grow. I do think NIO one day, maybe in 2025. I think honestly, I think it could be, say in 2025. I do think NIO could be selling at $300 or $400 a share. As long as everything's growing like it is now. Obviously, right now they're, tripling themselves year over year. But I think that's always going to happen. No, but I do think the market is there in China. Obviously, they're moving into Europe, and eventually they'll be here in the United States as well. The market's going to grow for them. Now, we can't pull up NIO right here on the TipRanks. Again, they have NIO at a high of $81 at this time next year. I do think if the market can turn around faster, I do think I can get over 81. But 80 to 81, 85 area is a good price point from a year from now. That's double what the price point is now. So doubling it within a year is really, really good. I do think it could go higher than that, though, as long as they're getting their projections like they're wanting to this year. Obviously, there's going to be a slight pullback with EVs a little bit because of the batteries and the fuel cell kind of shortage a little bit with the chip shortage as well. But I do think those things will be remedied. And again, these are long-term outlook stocks for me that I plan on holding until, they find something better in electric, honestly. These are like my retirement funds at this point. A lot of these stocks kind of are. I'm not going to get rid of them. For me, at least for the next 5 to 10 years. Then I'll reevaluate. Again, I'm always reevaluating these stocks at the end of every year. So coming in January, I'll reevaluate, my stocks all over again. Now, again, like I said earlier, if you want to think like a millionaire, you want to be a millionaire, you got to think like one. You got all these investments, pouring into NEO right now with just in the past week. I mean, look, you got Norges Bank again on NEO here. They just bought 13 million shares. This company's been loading up on NEO and Tesla a lot. They added a ton of shares over in Tesla. Like I said, almost 10 million there. They got almost 13 million right here. That's a lot of shares, right? You also have 1 million in Fidelity. You got Cloud Alpha with 730,000. You got Cloud Alpha again with 100,000. These are calls, obviously. They're betting only going up, which is a pretty easy bet at the price when it's at right now. There's tons of people loading up on NEO though. You got Assets Bank right here with 2 million more shares on top of what I already had. You got Healthcare of Ontario right here loading up 8 million shares of NEO right there as well. That shows you right now it's a good buying time. These people have a lot more resources than we got. And if they're buying that many shares, to me, it's a good sign, right? And again, I do my own research in these companies. Obviously, if you guys know, NEO did have a really strong quarter in Q4. On March 1st, the Chinese EV maker soared 149% year over year to $100.02 billion in sales. Its vehicle margin in Q4 came in at 17.2%, up from negative 6%. So that's big growth right there in the margins. This was during the same period of a year earlier, a meaningful higher than the 14.5% vehicle margin it reported in Q3 of 2020. So you see the Q3 of 2020, they did 14.5% margins, Q4 17.2%. So every time they keep going up with the margin prices. What's more, NEO reported 17,300 deliveries in Q4 versus more than 8,200 during the same period in 2019. So they more than doubled their deliveries year over year right there, right? And they also went from 12,200 in Q3 to 17,300 in Q4. Great growth right there. During the current quarter, NEO reported that it expects to deliver between 20,000 and 20,500 vehicles, represented a 15% to 18% from previous quarter. So an increase of 15 to 18%. Obviously, you do got NEO with their new ET7 EV, which will likely accelerate the company's sale growth. In January, NEO revealed its ET7 electric SUV, which is a really nice SUV. EV can be acquired with the technology that makes it fully autonomous. Moreover, a version of this vehicle can drive an incredible 620 miles on one charge. That is crazy, 620 miles on a charge on this SUV. While another version can drive still a hefty 435 miles on a single charge. You got the cheaper version driving 435 miles. You got the more expensive model driving 620 miles. That's really, really far for an EV. The fully autonomous ET7 includes 11 8-megapixel cameras on board, 1 ultra long-range LiDAR unit, 5 multimeter wave radar cameras, 12 ultrasonic sensors, and 2 positioning units. That's a lot. That is a lot right there. Additionally, the ET7 includes many elegant features, including standard soft closed doors, heated and ventilated front and rear seats, a nifty looking digital cockpit, and a 23 speaker 1,000 watt sound system. The ET7 is a range of 435 miles and can be acquired for $78,000, which is not too stratospheric. That is really crazy. Again, you got to remember, NEO is a luxury car manufacturer, right? They do luxury. So getting a really nice SUV that does 620 miles is really, really good. And even for the 435 mile one that you can get for $78,000 is really, really good, honestly. But I do think NEO has a great potential, and that's one reason why I brought that into this, because I do think their growth potential is far and wide. Next up on my list is Palantir Technologies. A lot of you guys know Palantir. It is a software technology company that has a very high potential for the next 5 years of growth. Palantir, back before the market started pulling back, it got all the way up to 45 bucks. And then on the second, obviously, it got up to right around $40. Then we had the market pullback. The market pullback pulled Palantir all the way back down to $20.18, which is a crazy buy. And currently sits at $24.32 with this recent little pullback due to those 10-year treasury yields. My outlook for Palantir right now, this time next year, I do think they can get up to around $50 this time next year, maybe a little bit more, but conservatively, I'm going to say 45 to 50 bucks. Some people think 60 to 70, but again, I like to think conservatively on my money. That way, you know, if it goes a lot higher than that, I'm very happy about it, right? But if it doesn't, hey, I was right, and I'm not going to worry about that. Now, as you can see right here, obviously, TipRanks has their high at $40 this time next year. But obviously, again, TipRanks had their high at $40 when it already hit $40 last time as well, right? Obviously, you know, these things are, you know, just out there for people to look at to see where it could go to. I honestly do think we could see $50 this year, which isn't too much higher than what they're having right here at 40. But I do think we can see 50, maybe a little bit more, though. Again, it could go higher than that. Their average is 25.83, and their low of 15. I don't think we're going to go back down to 15 bucks. Again, maybe with the market pullback, but even with the biggest market pullback we had just a little while ago, but I don't think we'll see that big of a market pullback again right now. Though I could be wrong, was that $20, right at 21 bucks. So I do think that the growth potential with Palantir long term, though, like 2025, you know, could be 4x, 5x itself. Now, like we did earlier, we'll look at the institutional ownership. Obviously, we had ARK. W just loaded up a lot of shares, over 2 million shares right here. They loaded up a Palantir. You had Cloud Alpha. You had Dumac load up almost 3 million shares themselves. You had Eaton, which loaded up over 1 million shares right there as well. You had the Vanguard Fund, obviously loaded up 6 million. You had another Vanguard Fund right here load up 5 million. You can tell right here, man. They've been loading up. Vanguard's been loading up like crazy. Another 5 million right there for the Vanguard Mid Cap Fund. You had the Vanguard Growth Index that's loaded up almost 2 million. Another Vanguard Mid Cap Growth Fund loading up almost 1.5 million shares themselves. Again, you had BlackRock Global load up 328,000 shares. So people have been loading up like crazy on this stock. And that right there gives you another reason to say, hey, look, obviously they have a lot more resources than we have. And obviously I've done my own research on these companies, reason why I'm so bullish on them. Palantir is a software company that enables customers to transform massive amounts of information into the knowledge that reflects their world. As an example, healthcare organizations use the software to make decisions on how best to allocate personal protective equipment supplies across different hospitals all over the country, who all have vastly different levels of needs for each PPE. An even better example is that the platform is used to identify patterns hidden deep within the data sets to help the U.S. military find what it is looking for. So you got to remember, you know, this helped find Osama bin Laden and other things like that. The CIA uses this company as well. The growth potential with Palantir is endless, I think. And the more that people start to see what they can do, and the more companies start using them, the faster and bigger they're going to grow. So on their earnings this year, the annual earning growth has now accelerated 3 years in a row, with 2020 revenue growing 47% year over year. This was Palantir's largest annual revenue growth since 2015. The company guided 45% year over year revenue growth in Q1 2021. Furthermore, it stated that the annual growth should exceed 30% each year over the next 5 years. That's another reason why I'm so bullish on this company. Obviously, their outlooks might be a little bit higher because obviously their outlooks, but I do think they can see 20 to 25% at least. But I think they can honestly exceed that 30%, especially with the growth they've had in the last couple of years. The more intriguing note I took from the research is that the company actually estimates that between the commercial and government sector, that the total addressable market is approximately 119 billion. A company TAM is the estimated amount of revenue that the database could possibly generate for a particular product the business offers. Considering Palantir's 2020 total revenue was just over 1 billion, it appears that the management has extremely high hopes for the future. The company has a very high retention rate with its top 20 customers, having been with Palantir for an average of 6.6 years. So obviously that means they're doing a great job. You have people coming back with an average right now of 6.6 years in a row. That is really, really good. In the second half of 2020, Palantir brought on 14 new customers and signed several multi-year deals in Q4 with companies such as Rio Tinto, Pacific Gas Electric. Palantir also continues to build a U.S. Army partnership, which should be a big source of revenue growth going into the future. So that right there alone can show you why I'm so bullish on Palantir and why I've added it into one of my top growth stocks over the next 5 years. Again, if you guys like this video, make sure you guys hit the thumbs up below. If you guys aren't a sub, hit that sub button. Also, there's a link down in the description if you guys want to get some free stocks with Webull, which I'm using right here. This is Webull I'm using. If you guys want to get some 2 free stocks, you sign up, put $100 in. You also get these tier 2 NASDAQs for 3 months as well. So you can see, buys and sells coming into the market. And also there's a link down in the description for the Discord. Make sure you guys join our Discord community. There's a lot of us over on Discord. I'd love to have you guys. Peace out.